From one investor to another. Good morning. This is Trader72. Welcome back to my YouTube show. It's been a few days since I last dropped a video, and well, I hope you're all well on this fine day. It's the markets are closed, so I thought I'd do this whilst it's quiet, and it's been a heck of a week. So a little bit of a flat moment. It's practically the weekend here in London. Enjoying the fine weather as per usual. It's been good, and I just thought I would do a little quick recap as it's been a few days, I think, since my last analysis of Amazon. Please do check that one when you see it, if you see it along the way on your search, which will be great. So without further ado, let's start obviously this week's latest news. Now, I think the big question I've got to ask myself is this a market pullback or a correction, as my title says there? So we are certainly in correction territory at the moment as it stands, with the obviously NASDAQ dropping nearly by 10 to 12% now, down since the start of the year. And I think the S&P Global a little bit less than that, but on a percentage it's also down. Not quite in correction as far as I'm concerned. But it still is a pullback, and we are looking at obviously the ongoing conflict at the moment. So the latest headlines on that at the moment is apparently that, looking at the headline I've found here, Rubio says US can achieve Iran objective without ground troops, which obviously is an interesting take there, as we're really not sure if that is the case or not. Who is Trump talking to? Who is Iran talking to? Isn't intermediaries between the neighbors, some of the Arab neighbors to the States? Apparently that's what's happening. But we still have no idea what's going on, and the fog of war, as we call it, I think it's a great title, I've mentioned this in my last video, I think, is still massively ongoing. The last we heard also is 12 US troops been injured after an Iran strike on a base in Saudi Arabia, which I'm sure is not going to help the markets when we wake up first thing on Monday morning as well. I hope all of these men obviously are fine, that's the main thing, but obviously those type of headlines do tend to make it obviously spike up the markets over the weekend. So the weekend, obviously, where things can happen, and obviously the wake up of the markets on the Monday morning could be interesting again this Monday. But it has been another red day indeed. Now, some of the headlines, as we'll see from this.
And cyber stocks selling off this morning after an Anthropic report.
Everybody's
and amid
selling.
a wave of redemptions and private credit, Oaktree says it can meet every withdrawal request. Let's get a check on markets. It was a pretty ugly day yesterday. 1.7% was the decline in the S&P, the worst day since the war broke out. We fall again today, so now we're on track for a decline this week. It would be the longest losing streak since 2022. Also,
there you go. So that says it all. Longest losing streak. Oil is up to $110 a barrel at the moment. US, obviously the bonds is obviously something we should all look out for in terms of US bonds. I can go into that maybe in another video. That also has an effect on the market. And as you can see, the S&P futures all in the red as well at the moment. So the NASDAQ, so correction as I mentioned.
Now as yields climb, we're seeing a market reaction. The NASDAQ comp within the last couple of seconds has now fallen 10% from its November high into correction territory. So what we're seeing here, yields rising, stocks falling. The question is, how much further do both of those moves have to go? Janet Mewey.
Well, that is the big question, isn't it? How much further will the markets fall? That is probably one of the questions I'm asking myself, and from the title I made today. So that is kind of where we are at the moment in terms of the situation. So there's been obviously a massive tech weakness this week. The tech has got also smashed up. Unexpected drops in key stocks. Big money repositioning or positioning quietly changing into defensive stocks, which are already overbought. I feel that they're already extremely expensive at the moment. So that's not obviously helping the situation. Federal Reserve obviously now, it's obviously left the Feds in a very, very awkward situation, whether or not now we're going from interest cuts to a potential hike on interest cut, which obviously is spooking the markets even more. Less borrowing means, of course, for a lot of corporate bond company Consumer spending could also be affected. Obviously, that will obviously be affected. Right. I think this war is now dragging into its 5th week, and I don't think anybody thought this would be dragging on that long, if I'm really honest. I think we slightly underestimated possibly the Iranians in terms of their capabilities. Even so, they did get, obviously, half of the actual government itself was wiped out by certain strategic bombing by the US and the Israelis, but it seems that there is still obviously the bombing is still ongoing in terms of missiles going from one end to another. So that certainly hasn't been stopped. So that is definitely, uncertainty is definitely wobbling the market at all costs. Uncertainty is one of the worst things that can happen to the markets. For some of you who just come into this market in terms of retail investors, this is the reality. A reality is that nothing's really for real, but it is there, and the uncertainty kind of grumbles, and people, it's a herd immunity. People will sell very quickly, and everybody will follow through to the next. So hence the liquidity of money moving around the markets at a very, very quick pace. So you really have to have balls of steel, so to speak, I think, to keep going. But I'll come to that in a minute in terms of how it works specifically for value investors as well. Meta, huge fallout yesterday, as some of you may have noticed as well, due to this court case with this addiction to social media for kids, well documented. I'm not going to go too much into that, but obviously that's cost an absolute fortune. There's another 2,000 or 3,000 cases backlog on that. Whether or not this goes through, it will go through probably many different courts, many different years before it hits the bottom line. But again, fear stacks in there, fear mongering as well by the press, the media on top. That is no doubt about it, that obviously that all builds up to any stock. Meta as a company, which you'll know from my analysis, please do check it at some stage, is fundamentally a very strong company with amazing numbers. There is nothing wrong with that company. Actually, there's nothing wrong with Microsoft neither, for that matter, but it is all about the fear around various different issues on the tech companies. So that is something that I've kind of well discussed in the last few analysis I've made there. Same with Adobe, actually, about the AI fear, and Salesforce and everybody else. Oh my God, it's the end of the world. AI is going to take over. Sales agents are going to destroy companies. Yes, some of them might well not survive. Some of them may well survive. But I think, some companies like Adobe, who have such a strong moat, and I know some of you will say, yes, Nick, you've got it on your portfolio, you would say that, but I do strongly believe that some of these companies are not broken, and if you look at closely and do an analysis or some detective work in terms of what they do and what their moat, their meaning, and their numbers, it is second to none, and there's no doubt there's no issues there. But anyway, let's not move away from the basic news of the day. So this is all what's happening at the moment. So at the moment, as it stands, obviously a close down. Nasdaq closed down over 2% down yesterday. S&P over 1.74. Nasdaq, as mentioned, is in correction, as you see from the headlines I've just shown you, by about over 10%. So is this a correction? Is this just a turnaround play? I don't know at this moment. This is obviously, if we knew this, would be great. Stagflation fears obviously ongoing, which is basically between inflation and deflation, and obviously there is that point where nobody really knows, so it's kind of staying. The inflation is sticky, which is above the federal rate of 2% at the moment. I think we're looking at now nearly 3%. And obviously we haven't factored in the war and the oil prices. And obviously the oil prices is what it's all about. Utilities and consumer staples, as you will see from the heat map I've got for you here. This is a recap of this week. Really the month, sorry, at the moment. This, you can see from the heat map of all these stocks there that everybody is in the red specifically this week. And even the Matia, Nvidia, Apple, which is supposed to be a defensive stock as a tech, is down as well by 8%. Microsoft is taking an absolute pounding this week. It's now in territory that's quite interesting for value investors, if anything. Meta took a pounding this week as well. Even the financial I own Visa, which took a pounding. JP Morgan's down almost 8%. Unheard of. Even some of the the retailers, consumer cyclicals as well, like Walmart, Costco's are down by nearly 10% this week. So it is a red bloody day indeed, as you can see. Tesla, Amazon down by 10%. Could go on and on. I'm actually doubtful whether or not ENH is even 10% up for the month, but I think it did pop up a little bit. This is based on a monthly basis, obviously, so just bear that in mind, of course. So we've gone through already the major issues there with strategically. I think that the issue now is obviously it's spreading across, I think at the moment, across the market, across the world in terms of the Arabic world. We're looking at Yemen with the Houthi missile activity now. Lebanon, obviously South Lebanon being invaded by the Israelis. With all sorts of explosions going on there. Apparently Gulf states getting missiles from Iran, and it's now starting to feel like it is spreading. Now, whether again this is down by through the media blowing this up a little bit or not, I don't know. I'm not going to speculate. I'm not here to have an opinion in terms of world global politics. I'm just a small retail trader, try to trade around this very difficult landscape at the moment. So strategically, where is the strategic? I mean, that's the question we've all got to ask ourselves. And I've seen a lot of YouTubers recently asking that question about what is a strategic situation play with the US there. Where are they going to go? Are they going to put troops on the ground? Who are they talking to? So lots of question marks there, really, in terms of where things are going. I am as confused as the next person. I'm pretty kind of calm, and I have pretty good vision. I did initially think this would be quite over fairly quickly. It could still be by next week. It could still take us by surprise. I have no idea who he's talking to. It seems like the Iranians are strongly denying any kind of peace talk. The points that were sent by the Americans were pretty much poo-pooed out by the Iranians. The Iranians came back with their own point and doing a tool booth for the Strait of Hormuz and getting paid for letting ships going in and out, repairment for some of the damage, obviously, as well. I can't see that happening. And my short position on crude at the moment is looking a little bit delicate, to say the least. I bought in initially at 92, bought at 102 and got out of that 102 situation thinking that it would offload slightly the risk versus reward. Kept the 92 thinking that it would come back eventually, and now it's popped up to $110 a barrel. So, so it is looking a little bit vulnerable there at the moment, as I'm now starting to see that I can't see the end of this war immediately. I don't think it will go on for 2, 3, 4, 5 years, as the media says. I think it will be eventually over at some stage, but how, in what capacity is the big question. Damage and reality on the ground. So, so this is all ongoing, as you can see there from my base. So best case scenario at the moment is a negotiation. The deal comes in the next few weeks and everybody goes back happy. Base case, which I think potentially might be the best case at the moment, continued strikes, no resolution, volatile markets. Worst case scenario, full regional war, boots on the ground by the Americans, who are gathering troops at the moment, over 10,000 troops, and going from there. So I think this is, let's have a quick look at the current market. The market obviously at the moment in rest mode, thankfully, because it's probably the best thing. It was a bruising day yesterday for me. Again, I lost over £500 on my actual account, on paper, not actual reality, obviously. And I am, it is getting quite serious in terms of, obviously, the correction at the moment. And looking at the NASDAQ, both in US 30, both have dived under the 50-day moving average, which is the first sign of a correction there. It's not quite reached the 200-day moving average, thankfully, which is at around the 19,000 mark on the NASDAQ. And looking there, I think around the 40, I can't see it, so I'm going to have to go back there, about 40,000. So we're still quite away from the 200-day moving average before I feel this is a proper correction. The momentum, as you can see on both sides, is down, extremely oversold on MACD and there on the Stoich. So very much on the pullback at the moment. In terms of my portfolio, it certainly has taken a pounding. As you can see, lots of alarms went off yesterday. Intuit, Salesforce, everybody took a pounding. If you look there, let's take the two indexes off the table here. Visa down 295. S&P went down held the storm pretty well at 408, to be fair. UNH took a pounding yesterday. Sprout held up, obviously being a defensive stock and obviously a more consumer based. Meta at 525. My God, when I was even doing that analysis last week, it was at 600, and some people were looking at 650 and thinking it was still a bargain. And actually now it's in proper, in terms of margin of safety, is in a pretty good spot. Again, maybe worth having a look sometime this week. Uber, which I bought very late on Thursday, went from 72 to 69. So again, that took a pounding on top. And obviously crude oil at $110 a barrel at the moment. So Microsoft 357 is now started to get very attractive in terms of valuation, a true valuation. So as you will see, because I'm very clear about my losses, this is not all bells and whistles and, oh, well, I'm making millions. Some people do say that they are doing very well, but in reality, this is obviously a new account, so obviously it will be in the red to start off with because some of these companies I'm buying are in distress and hopefully will be on the bounce. But after yesterday's result really taking a serious pounding at 290 in the red, I went from about 100, barely 120. Uber was about 60 on the start of yesterday, was 132. Thankfully, I bought in small increments, which is the way to do it. Be careful with your margins. And Visa was at £80 loss, now 193. So they've added almost, 400-500 quid yesterday, and I got pretty lucky it wasn't worse, if I'm honest, based on the markets falling off. Now, big question is, where will this all go next week? That is obviously the big issue. We obviously got economical news next week, which I could just double check for you guys what may be coming up. I don't think we've got anything coming up until Wednesday. Normally we've got the PMI news from the UK, ADP, obviously the private payroll on Wednesday on the 1st of April. Coming up, let's hope it's not a joke, 1st of April. Hey. We've got unemployment, obviously, on Thursday. And we got the non-payroll farms, another big Friday. We all know that that's the monthly gathering of the news for the economy for the month. Non-payroll farms are a big number, obviously, and expecting 55,000, which is hopefully better than the last month, which was minus 92,000. So we're expecting slightly better numbers there for the month of March. Where we are at the moment in terms of the eventual outlook on this, and I just want to, it's always good to recap on every video I make, and this is, something I wrote myself there. About the reality check with the current market and the topsy-turvy world that we live in at the moment. Listen, every market's had a crash at some stage, or a correction, or a minor correction. 2000, 2008, 2020, the crash of 29, which was probably the worst out of them all, really. We've had, every 10 years we used to have one. We haven't had one for about 20 years now, or not 20 years, since 2008, really. We had brief 2020 with COVID, obviously, which was very bad, but it recovered fairly quickly. If you are a value investor, you have got to ignore the noise. There is a fear-mongering from the media, from analysts, who, don't forget, have to make a living out of this. And listen, I'm not even criticizing anybody for making a living, by all means, but there is a lot of noise, a lot of headlines will come out, and the stocks will bounce, they'll fall, they'll come down, they'll come up again. But the main thing is, when you do value investing, which I've learned from the great investors, so this is not me reinventing the wheel in any way, sort of shape, is the fact that if the company has a meaning, a moat, the fundamentals make sense, and I'm talking about strong margins, in everywhere from net profit to free cash flow to gross margin, and amongst a criteria that we abide to, which I've mentioned quite a few times in my videos, and the story matches with the share price, it's then you've done the right thing. Now, if you bought the stock at the right price, off its intrinsic price, the true worthy price of the stock, and you bought it at 25, 30, 35, even 50%, you have a certain degree of protection. Now, nothing's ever protected, but if you buy a big cap with company, the chances are that it will fall possibly by 50. Even actually Adobe, which is one of the examples I have on my books, which I bought too early at the time, only about 10-15%, is falling through to nearly 50% discount now. Now, it is falling, but it is reaching a certain bottom. line of the share price. So it will help. So you've got to ignore that, really. The markets also do factor in, issues ahead of time, such as what's happening at the moment. And once those issues have been factored in, the market will bounce. It always has done, historically. So, listen, like I said, it's never any guarantee, but most of the time it certainly has. It certainly rebounded very strongly on the back end of 2008, which was very close from complete collapse due to the sub-mortgage market collapse there as well. So there is, obviously, was a major issue, but there was a bounce eventually. It is strong. The economy of the US and some of the, European countries, well, not as much now, were strong. So there is always a bounce along the way once those news are in. They've been agreed. I think what's going on at the moment is the uncertainty is certainly a major issue for the markets, and I think that's what's happening. Once we clear the fog of war, as I like to call it, then hopefully we'll get a clearer picture and the markets will have a clearer idea. Now, having said that, there's still a very strong chance that we could be in a correction market, which could be going down further by another 5-10%. But be careful. Look at your current portfolio. If you're overloaded and you feel that maybe you need to trim it. Make a decision. Better than not making a decision at all. Better than being a rabbit in a headlamp. That's what I would say. I've lost countless amount of pounds due to the fact that I made no decision. I'd rather make a decision than not at all. And I think if you speak to most traders, that will be the case as well. So there we go. So I think eventually the noise will fade, as it says there, and the numbers take over. The market always corrects itself back to the intrinsic value of the business underneath it. And that encapsulates what I've just said to you guys. So let's see what comes out. I hope this will be helpful. From one retailer to another, it's Trader72, over and out. Have a great weekend, and I will see you for more downloads coming up soon. I have a few ideas of what I might be analyzing next. Please do check some of my last videos, such as meta analysis and the Amazon one as well, which I did, the $200 billion capex gamble, or is it? So please subscribe and like. Have a great weekend, guys. Take care.